Right. Well, welcome everyone to our Thursday edition of TLG Talks, Trowbridge Law Group Talks. And in this uh, round of interviews, we're interviewing people who are close to our firm, who maybe have used us as their securities lawyers and are successful securities syndicators. So, my good guest today, very happy that he joined me, is Agostino Pintus. And Agostino, are you calling in from Cleveland this morning?
That's
Or
right. That's
Akron?
right.
Which
Sunny,
one is
sunny Cleveland.
sunny Cleveland? Boy, that's wonderful. Is there snow on the ground?
There is a little bit of snow, a little bit of snow. I keep looking outside to see if it's still there. I just got back from Florida, so it's
Oh boy.
makes for quite the culture shock just to get back after being gone for over 6 weeks.
Oh, I guess it is. And I know that I've been to Cleveland several times for teaching CCIM courses and going to the Rock Hall. Uh, I used to be a dues paying member, not a artist, but I used to join the Rock Hall, and that was absolutely a terrific event. My girls and I took them one at a time on a trip to the Rock Hall. It's a little cold in the wintertime when you. I was staying at either a Radisson or a Holiday Inn right on the corner, and you walk right down, right across the bridge to where the football field is. And it's cold
Yeah,
in hell. And I've seen the snow, what's called the lake effect.
Lake Effect
Yeah,
snow. That's right. That's
yeah,
right.
boy, that's something. So, without further ado, your website, if anyone wants to read about you and see more about you than we're going to get into in this interview, your website is Bulletproof Cashflow. I'm just wondering if there is such a thing, but that's a topic for another day. That's great. And why don't you tell me how you got into syndicating multifamily properties?
Absolutely, absolutely. Well, Gene, first of all, thank you so much for inviting me to your show. I greatly appreciate it. My journey really started a long time ago, and I've been an entrepreneur since I was a kid. Since I was like 10 years old, and ever since then, I had a knack for computers and technology, and I just loved tech and programming and all that fun stuff. I learned how to program my own computer when I was 10 years old. I learned on a Commodore 64, and I had visions of being an entrepreneur. But of course, it's my parents, immigrants from Italy. They were not really big on entrepreneurship. They were very scared of entrepreneurship, really, and they encouraged me, rather than being an entrepreneur, you know what, you need a job, go get a job. So that's what I did. I ended up going the route of corporate America rather than entrepreneurship, and I did well. I did okay. I rose through the ranks and started off as a network engineer, then eventually a director of IT, and then I became a VP, and finally end up as a CIO, Chief Information Officer, Chief Technology Officer for publicly traded companies and stuff like that. So,
That
did
would make me want to shoot myself to have that job. Anything like that in that corporate structure. Wow.
well,
No, thank
and,
you.
and that's and that's the thing, Gene. See, and you and I've done business many, many times. I know you quite well, and you're an entrepreneur at heart, just like I am. And I think that was probably one of the biggest struggles that I had was as an entrepreneur. I had a real hard time working in corporate America, and I did it for a very long time too. That's the thing. I put myself through it. I think part of that culture of fear in terms of our family was ingrained so deeply that if I was not working at a company, which happened quite frequently because I'd either get fired or something along those lines, I would almost feel worthless. Right? It was a very weird sort of dynamic, and it was that fear that kept me from really achieving anything outside of corporate America. And I would say that what led me to the 10 dark years, what I call the 10 dark years, when I was, I'd say about 15, 16 years ago, I was working in corporate. I was working at this seemingly great company. I had turned this company into one of the top technology focused debt asset management companies on the planet, right? With my technology, it's probably still in use today. And the CEO decides we're going to take the company in a new direction, fired a bunch of senior executives, myself included,
Oh no.
and I'm out the door. Hand me the box, pack up your stuff, get lost, you're done.
Uh-huh.
And that led me down like I said, the 10 dark years. And you really have to be careful whenever you leave corporate and you allow a company to tell you what you're worth. Right. And I think many people fall into this trap, just like I did. I felt worthless. I mean, for a long period of time, I was just floating from job to job to job. I had no focus. I had no, all I was concerned about was finding the next paycheck. That's it. That wasn't about building a legacy wealth. It wasn't about anything else other than just making it through with that paycheck. I wanted that paycheck. And that's, what, Gene, that was probably one of the biggest struggles I had in my life, was trying to figure out what was I going to do next, and it wasn't until after spending wasting a lot of time, really, I shouldn't say spending, I say wasting a lot of time going from job to job. I finally ended up back in corporate America at a decent company and tried to get back on my feet again, which is what I did, only to, of course, get canned again. But it was at that point, though, that I realized, I was talking to an attorney friend of mine, and we're going back about 4 years ago, actually, I think, who's an attorney. He's a real estate attorney. And I asked him this question. I said, I was looking at a building. Like, at that point, I'd done single families and small multifamily. I was doing that for 16 years ago when I first started down this journey, while I was working that corporate job. I look at this building. It was like a 30 unit, nothing crazy, but I had no idea. I look at him like, who owns that? And he's like, well, what do you mean? And this attorney friend says, well, what are you talking about? He goes, people own it. I go, what people? You mean the bank owns it? Like, what people? He goes, no, individuals go and syndicate deals. And I'm like, syndication? What's that? And he explained what syndication was. And I'm like, you know what? I can do that.
I can do that.
I can raise money. I can talk to people. I work. The one good thing about corporate is that the big numbers didn't really scare me. That's the thing. That's the one, several benefits, but one of the bigger benefits is that dealing with multi-million-dollar budgets was not a real big shocker for me, because I've been doing that the entire time I was in corporate. So I wasn't so surprised about it. And I'd say that once I understood how it worked and what it took to get a deal done, I got to studying as hard as I could, as fast as I could, to learn that part of the business. I'd been doing smaller real estate. Doing syndication is a very, very different scenario. Sure, that there's similar terms, but I had to really hunker down and train like my life depended on it, because I had every intention.
Well, it did depend on it.
It did depend on it. Yeah, because I had every intention of leaving corporate. And as a matter of fact, I told my girlfriend at the time, I said, you know what, this is the next thing that I do will be the last thing that I do working for someone else. I'm never doing it again. And I made
that's amazing. That's just amazing. I know that I had one W-2 position in my life. I was doing a lot of consulting for Southern California Edison, big publicly traded utility company out here. And they made me an offer to bring me in-house to be in charge of all the real estate. And it was a heady job, 800 people under my watch and all this stuff. And I lasted 6 months. I finally walked into the guy and said, no, this isn't, I got to ask 4 levels of people above me if I can sharpen this pencil. I don't think we want to do that. So I left. So I know that you started in the multifamily area, and have you branched out at all to other product types?
Absolutely. I think that once I made myself that promise that I was not going to do corporate again, I got to work and studying and training on multifamily. And now, more recently, fast forward a few years now, we have upwards of almost 1,000 units at this point. And now we're doing redevelopment projects and development too. It's another thing we have coming down the pipe. So basically what that means is taking historical assets like the Rockefeller building in downtown Cleveland, for instance. It's a historic monumental asset. It's on the National Registry of Historical Places. It is a very special building where John D. Rockefeller used to live. If you guys don't know who John D. Rockefeller is, Google him. He is or was one of the richest men on the planet, still considered to be in today's dollars one of the richest men on the planet if he were still alive today. And was his first building before he went off to New York. So it's quite an honor to actually take down this asset and with our investors, and we're going to convert it to multifamily. We're going to have a couple of floors of office, as well as some retail and some food on the first floor. It's just a monumental asset. And
if I remember, you, I think your plan is to raise $20 million on that offering. You've got to have some nerve to go to the marketplace to raise 20 million, although there's a lot of money in the market today. But on a big project like that, a project that's known to everyone who lives around Cleveland would know that building, and they'd wonder, well, I really wonder what's in there. When they get in there, they're going to find stuff that's construction that doesn't work or whatever. So that's a challenge. Well, congratulations. That's good, but that still has multifamily as a part of it.
Oh, it's a huge part of it. But, there's something that I want to touch on that you just said that takes a lot of nerve. And I think, Gene, you know what? It takes a lot of things to make money in this business. And one of those things is courage. I was actually talking to a gentleman just yesterday, and he's been in multifamily, small multifamily, duplexes and single families and stuff like that. He's been doing it for 20 years or something like that. And I explained to him just, in a couple of minutes what I do. And he is like, he can't even put his head around how to even raise the money. He can't put his head around a $4 million deal. He just can't do it. Mm-hmm. And in terms of, he's afraid. He's afraid. He just doesn't. And I think that one thing that people have to realize is that if you're listening to this show right now and you feel fear, it's because you don't have the knowledge. When you have the knowledge, when you do something a bunch of times, you're not fearful anymore. It's like jumping out of an airplane the first time. If you've ever done it, Gene, I know you jumped out of an airplane before, right?
Yes.
Yeah. And the first time you did it, you're probably scared.
One, yeah.
But you do it a few times, you're not scared anymore.
No, I don't think so. I'm never going to get to the few times. The one time was good enough. So with your moving bigger into multifamily and in this development stuff you're into, what do you see for your strategy for the next, let's say the next 3 years as a syndicator? Where do you think you'll be at the end of these 3 years?
We are certainly in very, very interesting times right now. I hate to say the old cliche line that you see in every single advertisement. We're in unprecedented times, and it's absolutely true. Where money is super cheap. There's deal flow. There's deals that are happening still, but the market is super, super tight. It largely relies on relationship. And I think that that's going to be a continuing thing. We're going to see a lot of cap rate compression, in my opinion. And more than anything else, it's going to come down to broker relationships, and more than even more than trying to do the old call and mail out a postcard type scenario. I believe it's going to depend largely on broker relationships for the next several years in terms of trying to get your hands on more of these deals. Furthermore, depending on where you're going, I also see development and redevelopment of assets is going to be a significant amount of growth there. I mean, there's just not enough assets for people to move into. Right. And even in a place like Cleveland, we're Gene, we just started off now buying single families. So we created a little side business here to buy 100 houses by the end of the year. So we started at 0, basically. We're already at about 6 since the beginning of January to today. So it's like we plan on ramping up very, very quickly. And even all those houses, as soon as you buy them, they're already filled up here in Cleveland. And it's like this all over the country. So it tells me that there's still a lot of demand for housing, for good housing, I should say. And that's going to continue, I believe, for at least the next 3 years.
I have a client right now, not in housing, but in self-storage, that just bought an old Sears store. and they're going to convert the Sears store to self-storage, and that'll be interesting. Self-storage keeps popping up all around me because when I was syndicating, I built a lot of self-storage, so I'm always interested and conscious when I see what they're doing, taking old industrial properties and going inside the property. And I mean, it's all aluminum, aluminum siding, aluminum doors. They come and go pretty easily, but there's a lot of reuse. It'd be interesting to see what they do with the shopping centers. That
Yeah.
they, I know that there's still an awful lot of business that goes on inside of a store rather than online. But if you take away 10 or 20% of the in-store business, that store might very well not make it, and it's all gravitating to Amazon. Did you buy anything on Amazon in the last week or two? Did you?
I have. I bought a
Yeah,
light that
we
quit
all have,
working.
right? It's just amazing. In fact, I'm getting lazy. During this time with the COVID, the joke around here is if anyone needs to go to the store in the family, send Gene because Gene's got the life insurance. But even even I think it's just the last thing I bought from Amazon, I bought shaving cream and I needed blades. Instead of going up to CVS, I just went online and it was delivered the next day. Crazy. That's really not me. So, real estate is going to change, and the size of the private placement market, the market that you're in and that I'm in, is huge. The SEC came out with some statistics that measured a 12-month period, and the 12-month period was, well, it ended last year. They're getting ready to come out with this year's analysis, but during 12 months, the private placement market, Agostino, raised 1.8 trillion with a T, trillion dollars. It's not all in real estate. Of course, about 30% is in real estate, but 1.8 trillion. And Agostino, that's about 7 times more than all of the IPOs that came out in that same 12-month period on Wall Street. So the source of money for businesses to grow, businesses that aren't going to go to Wall Street and get on Wall Street, is the private placement right where you are. And 99% of that 1.8 trillion is raised in Reg D, which is the space you and I are in, and the vast majority of it, over 90%, is raised in 506B with no advertising. And that's because people know they're investors, and they're investors. Once investors lock in on a good syndicator, they're going to come back over and over and over. There's no doubt about that. So I'd like to ask you what piece of advice would you give to the rookies out there? I don't know if you know it, but right now we are running a rookie camp, education online, where every quarter we have a 2-day rookie camp, Tuesday and Thursday, 3 hours each day online for 15 people, to give them the same information we would have given in our 1-day live events, which you might have even been to at one time. So we're doing it virtually, Jonathan, my law partner, and I. And it's interesting. With 15 people, we can have a lot of interaction. And it's interesting the questions that they come up with if they don't know what they're doing. And we do our best to keep syndicators out of there, because a syndicator may come in where they've done one deal and it didn't go well, and they've got a bad feeling about this. I don't want to poison the well. So for our rookie camp. So what piece of advice would you give someone who is thinking about being a syndicator?
You know what, Gene, there's actually 3 things. There's 3 things that I found from my own coaching that I do. And I centered the Bulletproof cash flow, I guess you want to call it, all the media stuff that we've been recently creating was based around these 3 concepts. The first is mindset. those limiting beliefs that held me back from when I was a kid up until through adulthood really stopped me from achieving what I felt I could possibly do to live to my full potential. And now that I'm doing it, it's like I would never go back to corporate ever, never. It's like to me it's I can't even think like there's no way I would ever do that ever again. And it's because of mindset. The mindset was broken when I was young, and now what we do is we focus on mindset. I focus on creating a vision board and to write out your daily goals every single day. So vision board and daily goals, those things are super, super important, and being around other people that helps strengthen your mindset. So again, we have a show that talks just about mindset. Secondly, sales and marketing. When I was in corporate, I would loathe the sales guy who would come up to us and try to sell me something. And it's funny, Gene, that people don't like to be sold to, but they love buying stuff. It's funny how that works, right? And however, if you're going to be a syndicator in this business, you need to know how to sell yourself, how to sell the project in a way that's not pushy, but in fact, in a way that really conveys the message about the asset to your investor and make them want to invest with you and in the property, right? And it isn't just throwing a bunch of numbers at them. There is a way. There's a way to do it, right? And so we actually have a show just based on how to sell, like how to raise capital, how to do all those sorts of things that are really important to the syndicator. And then the third and foremost is going to be the real estate show, right? And this means becoming really, really good at the terminology that you need to speak the language of real estate. As soon as I hear someone come up to me and say, "Hey, I found a property. It has a 12 cap. It sounds like a great deal." No, the answer is no, it's not. The answer is no. It's a very basic thing. The higher the cap rate, the higher the risk. The lower the cap rate, the lower the risk, right? And I mean, I know it's just a basic concept, but there's a whole language around real estate that you really have to sit down and study and train. And how do you speak the language of real estate? How do you convey that you know what you're talking about? And all these things are super, super important. These three things are super important to attain any level of success in real estate, especially in the world of syndication. And without these three things, in my opinion, you're creating a whole lot of extra work for yourself, and it could be very, very tricky to build success without it. That's my 2 cents.
Well, thank you for that. You've heard me, and I think I might have even done it when you interviewed me. I talk about selling the sizzle of real estate.
Yeah.
And it's all geared toward building your database. How do you get people in your database and convert them to investors? And the first thing is you've got to find people who are interested in real estate. If they're into crypto coin, they don't need to be in your database, I don't think. They're into real estate, then you have to decide in real estate, a part of the real estate universe, which is a huge universe, that you see some opportunities. And you need to be able to clearly identify those opportunities that are in the space of real estate in which you want to work. And then you have to surround yourself with a team. And the team has to be ideally suited to help you capture those opportunities. And when you've done that, in my way of thinking, you have with an investor you're talking about, they're into real estate, they're into multifamily, that they know about your team and they're still talking to you. You built the substantive relationship that you have to have, and then you just present the offer. As you said, someone running around saying, I've got a PPM and it's yielding a 12% cash on cash. If that's the first thing you say to me, and I don't even know you, I probably had someone the day before say, I've got a PPM that's yielding 16%. And so I'm not interested in you. You've got to be able to take your offering to people who are somewhat vetted to be interested in hearing about you and your offering. Yeah. And although I talk about selling the sizzle, you really, and you said it, you really are presenting opportunities to investors to invest with you. I mean, if you had all the money in the world, you'd buy all the properties yourself. Neither one of us have had all the money in the world, so we have to find other people. We have to find these opportunities, and we just have to educate them. That's your educate them that when you come you come to them with an opportunity, it's a good opportunity and you know it and it's right in your wheelhouse. It's the type of opportunity you're looking for. You have a team, and it's the type of opportunity that you know that this investor is interested in. Then you can just sit down and explain the opportunity with them. And I think that's important. You know, a lot of the people that I've interviewed didn't go into it in that much depth. And so I wrote down your mindset. Then I wrote down sales and marketing. And what was the third one?
Real estate,
Oh, your
understanding the
real estate
language of real
knowledge.
estate.
Yeah.
Yeah. Yeah. And I mean, you know what though, Gene, and I'm sure that many of the other people you've interviewed, they're good at multifamily. They know multifamily very, very well, but they're familiar with other asset classes. Like they may not be experts at say self-storage, but they're aware of it. Like I'm no expert at self-storage, but I know that it lags behind multifamily. Wherever there's new multifamily, self-storage is usually right behind it, at least in the States anyway. Things like that. You know, redevelopment and development projects, we're into that too. I know a little bit about triple net. I know a little bit about single family. It's part of being a well-rounded individual when you're talking real estate. I'm not saying you have to be an expert at everything, but it's good to understand what's going on in the world of real estate. It's
No, I
kind of
agree with you. And I was telling someone on a podcast last night, their podcast with me, and it was just basically for passive investors, that as a passive investor, you need to educate yourself on the asset class. That's your responsibility. Agostino is not going to educate you on the world of real estate. Agostino will come to you with an offering on the Rockefeller building and will educate you on that, but you need to know something. So you need to go to some of these meetup groups, go online, and if you want to invest in, there's self-storage gurus, there's mobile home park gurus. You need to you need to learn and invest in yourself, excuse me, before you invest, and then you stick with the syndicator that you know and do the investing.
yeah.
Tell me about the makeup of when you go into do a deal and you're going to be the managing member. Tell me the makeup of that entity. I know it's an LLC, but not names, but what type of a team do you have in that entity?
Sure, absolutely. I mean, so inside the entity itself,
Right.
so typically there's at least two GPs. There's usually myself and someone that I've worked with for quite a bit of time, or I know of for quite a while. That, my God, is super, super, super important, guys. Make sure whoever you partner with on the GP side, the general partner side, someone you know, you trust them.
Mm-hmm.
They have a good reputation. I mean, Gene, I'm sure you've spoken to many people that are good, honest people, but they're partnered up with the wrong guy or the wrong girl. And next thing you know, it's like they're carrying all the weight. The other person's gone, whatever. It turns
Or they
into a
don't
disaster.
partner at all.
Yeah,
They
or
don't
no
partner at
partner.
all. And then when Gene Trowbridge asks Agostino, well, I like your deal. That's what I expected to see in a deal from you. And I've got the $50,000, but I'm a little concerned. If I give you the $50,000, what happens if something happens to you?
Yeah.
And if you can't answer that, if you can't answer the issue of continuity, I'm not going to invest with you.
That's
And
right.
a lot of passives call me and want me to look at deals, look at the offering documents that maybe I've even drafted, but I never get that far. I say, no, I don't do that. But there's a couple questions I think you should look at. And it's the first one is a managing member, is it an LLC, and is it an individual? If it is, say no, thank you, because
Right.
I've been the replacement managing member 6 times in my career, because things happen to people,
Yeah.
especially in this period of COVID. Right now, we're experiencing where the key member of the manager LLC is stricken with COVID and is down and been in the hospital 23 days so far. Well,
Wow.
what happens? Luckily, we talked him into having another person in the LLCs who can sign documents and take over. And we did have someone last year who was bought a 750 pad mobile home park with room to build another 400. And within the first 6 months, he raised $12 million. And we told him he had to bring someone else in to the management with him. And within the first 6 months, he developed pneumonia and died.
Oh my God. Wow. Wow.
And so now, thank God, we had that person in there to take over. But now I'm wrestling with that person. I said, okay, now here you are, exactly where I didn't want the other guy to be. Now you're the sole member of the manager LLC. We've got to find someone. Well, I don't want to share. Well, you've got to find someone. You can't go on without with just you, because things will happen. So I think that's important. And when you talk about finding people who know things maybe that you don't know, that's a good team. You get a broker. You're probably out on the street and you can spot a good deal like crazy. But I don't know if you like to write quarterly reports and communicate with the investors like someone else might, like a property manager might do. So there's a team waiting to happen, right?
That's right. That's right. And Gene, you just touched on something too. There's in this business, it's a team sport. We keep saying team. You mentioned team several times now. I mentioned team several times now. You can't get greedy. There's deals that I can do by myself, but I prefer not to. I don't want to do them by myself. I want to have a partner with me. It doesn't matter that I give up half of my share, so to speak, to that partner. It doesn't bother me at all. The reason why is because by involving that other partner, I'm getting their brain trust, so to speak. They're helping me run the asset. They're lightening some of the load, like you said. They're handling maybe they're handling investor communication, and I'm handling operations, or vice versa, whatever it might be. But the point is that you're spreading the load, and it also opens you up to more opportunities.
Sure.
If you're partnered up with someone that is an actual player in this space, maybe they'll bring you in on one of their deals.
Yep.
It's to play like, oh, it's all mine. It's very, very short-sighted, in my opinion. Very short-sighted.
And I think one of the things the syndicator needs to do early on is to take a position that you're not going to buy your own real estate. If you're out there and you see a deal that you might be able to pull off yourself, you really need to syndicate that deal. We don't want your reputation to be such that, well, if they're really good deals, Agostino buys them himself and only the leftovers actually get to the marketplace. You need to be a syndicator, period. Well, that's about the time that we have today. This has been very interesting. You bring a little different, your three things, mindset, sales and marketing, and real estate are three different things, but I think you're absolutely right. You need to have a business. You need to have a business plan. You need to follow your business plan, and you're always building your database. You're always building the relationships with lenders and brokers, because there's a lot of real estate out there, and there is a lot of money right now. You just need to be able to show people the opportunities and capture it. Well, that's it. I want to thank you for coming on this Thursday and being with us. And I will see you. People will get a hold of you by your website is bulletproofcashflow.com. I can read that. That's very pensive. You're looking at that picture, and the brick background is gone. So you must have moved into a new headquarters space for your webinars. So that's good. Thank you. Thank you so very much.
Really appreciate it.
We'll see you the next time I get to the Rock Hall, all of you.
Very good.
Okay.